Right now, something feels off. The market keeps going up. AI stocks are through the roof. Everyone's making money. Everyone's talking about AI. And that is exactly what scares me. Because I've seen this before. Not personally, but the data has. In 1999, everyone felt this exact same way. The internet was going to change everything. And it did. But not before it wiped out trillions. Not before it destroyed retirement accounts. Not before it ended careers. So here's the question nobody wants to ask. Are we in another bubble right now? I'm going to give you the honest answer today. No hype, no clickbait spin. Just the numbers. Because if you're invested in AI stocks, you need to hear this. Stick with me for the next 8 minutes. This could literally save your portfolio.
Let's go back to 1999. The Nasdaq was on fire. Every tech company was worth billions. Pets.com raised $82 million at IPO. They had no profit, ever. Webvan raised $375 million. Grocery delivery. Burned through it in 2 years. Sound familiar? Today we have AI startups burning hundreds of millions. Some have no revenue. Some have no path to profit. But they have a valuation. And they have a narrative. Here's what happened in 2000. The Nasdaq dropped 78%. 78%. If you had $100,000 invested, you woke up with $22,000. It took 15 years to recover. 15 years. Now here's the painful part. Most people didn't even hold on. They panic sold at the bottom. They locked in the loss permanently. They never got that money back. The bubble didn't just pop suddenly. It cracked slowly, then collapsed fast. First, the small.
Now let's talk about today, because the numbers are wild. Nvidia is trading at a price-to-earnings ratio over 40. At peak hype, it was pushing 70. The S&P 500 average PE is around 16. Nvidia is more than double that. Now, is Nvidia a great company? Absolutely, no question. They make the chips that power AI, real revenue, real growth, real product. But here's the thing about valuations. Price and value are not the same thing. You can own the best business in the world and still lose money buying it at the wrong price. Amazon dropped 94% in the dot-com crash. Amazon, the company that became everything, still fell 94% because the price was too far ahead of reality. Here's what the bulls will say. AI is different. This time it's real. And they're right. AI is real. The technology is genuinely transformational. But so is the internet. And internet companies still crashed 80%. The technology being real doesn't protect your stock price. The valuation being rational is what protects you. And right now, valuations are not rational. The market is pricing in a future that may take 10 to 20 years to arrive. And if growth slows even slightly, if interest rates stay high, if regulation hits,
These stocks don't fall 10%. They fall 40, 50, 60%. That's the math. Not fear. Math. Okay, so what do you actually do? I'm not here to just scare you. I'm here to give you a real plan. Because there is a right way to handle this. First, don't panic sell everything. That's not a strategy. That's fear. The market could run another 20% before it corrects. Trying to time the exact top is nearly impossible. Even the best hedge funds fail at that. So instead, here's what smart investors do.
Number 1, rebalance your exposure. If AI stocks are now 40% of your portfolio, that's too much concentration in one thesis. Trim it back to 15 or 20%. Lock in some of those gains. Rotate into undervalued sectors. Number 2, look at dividend-paying stocks. While AI stocks pay you nothing to wait, dividend stocks pay you while you hold. You get paid to be patient. That's a very different position to be in. Number 3, build your cash position. I know cash feels boring, but 4 to 5% in a high-yield savings account? That's real money. Risk-free. And if the market crashes, you have buying power when everyone else is panicking. The 2000 crash created generational wealth for the people who had cash ready. Number 4, keep investing in index funds. Seriously, dollar cost average every month. Don't try to be clever. The market always recovers over time. But individual AI stocks may not. Remember Cisco. Remember Pets.com. Some of today's hottest AI names won't exist in 10 years. And finally, stay educated. Not just Twitter hot takes, not just Reddit threads. Actual earnings reports, actual revenue growth. Ask one question before buying any AI stock. What is this company actually earning today? Not projections, not potential. Earnings today. If the answer is not much yet, that's your signal to be very careful. Look, I'm not saying AI is fake. I'm not saying sell everything. I'm saying the price has gotten ahead of reality. And in markets, that always corrects. Always. The investors who survive bubbles aren't the ones who predicted the exact crash. They're the ones who were prepared, diversified, liquid, rational. Be that investor, not the one checking their phone every 5 minutes, hoping it goes up. The 2026 AI bubble may not pop this year. It may not pop next year. But the cracks are forming. The valuations are stretched. The narrative is running hot. And history always rhymes. Protect your downside. Let the upside take care of itself.